looking at around as we are looking as we are looking at the price action, we talked about the different strategies that traders can use to analyze the forex market using the price action. We say that we can use the candlesticks, we can use the support, we can use the resistance, we can use trend lines, we can use chart patterns, among so many other strategies, as long as you're analyzing the forex chart without necessarily using indicators. Okay, now that one is what we call price action. The other way of analyzing the forex market, we say that is one that now you can combine the price action as well as the using indicators. Okay, now if you are a beginner in trading, I usually feel that some people that are very new in the forex market, using indicators usually like their to go strategy. Okay, so if you are here and this is the first time that you're joining us, I'm sure that if you go to our YouTube channel, you will always be able to see beginner trading strategies that you can be able to uncover there. Okay, today I wanted us to talk about basically about the trend lines. This trend line is a method of analyzing the forex market, and it's a method of analyzing the market as well as it's a way of trading this market using price action. Okay, basically we'll be looking at how you can go to draw those perfect trend lines, how you can go to have perfect entries, where you can go to put your entries, where you can go to put your exit, as well as how now you can entirely use trend line as your main trading strategies. Okay, now if you have any question, kindly don't forget to if you have any question, kindly don't forget to ask, because this session is for you. Okay, this session is for you because we are basically exploring this world of forex together. Okay, if you have any burning question, kindly don't forget to ask. So today we're basically talking about the trend lines. Okay, and these trend lines, are these trend lines basically they are lines that are drawn to show the prevailing direction of the market. Okay, like if you see that the market is maybe clearly bullish or maybe the market is clearly bearish, now this is the best time to use the trend line. Okay, so this trend line basically from the word trend line, it comes from the word trending market. Okay, and we know that trending market means that the market can either be, so this trend line, it comes from the word trending market, and trending market, it means that the market is either bullish or the market is either bearish. Okay, this goes to show you that anytime you'll be using the trend line, we'll be using it when the market is clearly bullish or the market is clearly bearish. Like if the market is clearly bullish like this, or when the market is clearly bearish like this. Okay, now this is the best time to use the trend lines. Okay, so this also shows you that in the event maybe you look at the forex chart and you say that the market is ranging. Ranging market is basically anytime the market is trapped in a range like this. Okay, you can be able to see that the market is like trapped in a range. Okay, so anytime the market is trapped in a range, this is not the best time to use the trend lines. Okay, when the market is ranging, support and resistance is usually like the best way of analyzing the forex market. Okay, now when the market is trending, you can combine support, resistance, or you can use the trend lines as your way of analyzing the forex market. Okay, so in today's lesson, we are very specific on using the trend lines. I don't know if you have any question. Okay, now there are some key things that I want you to always remember anytime you are talking about trend lines. Okay, these are the key things that you as a forex trader should always be able to remember. Okay, now one of the things that you should be able to remember is that trend lines, they are applicable on any time frame. Trend lines are applicable on any time frame. Now that goes to show you that whether you are a scalper, you are a day trader, you are a swing trader, or a position trader, this strategy is perfectly for you. Okay, so these trend lines, they are applicable on any time frame. Like you can use it on the 1 minute, the 5 minutes, the 50, the 1 hour, the daily, the monthly time frame, any time frame that you'll be able to use. Okay. Secondly, for me, the reason why I have a biasness of using higher time frame. Okay, this is because like for me, anytime I'm using like the trend line, I prefer using like the 1 hour time frame. From my own experience, is that I have found more success on higher time frame than on lower time frame. Secondly, on higher time frame, the market is usually more stable. Okay, like if maybe you have identified like a key level such as a trend line, the market will always respect that trend line on higher time frame than on lower time frame. Okay. Now, the second thing that you should note about this trend line, apart from it is applicable on any time frame, is that trend line, sorry, sorry, trend line, they act as areas of support and resistance. Okay. Areas of support and resistance. Okay. We can use the trend lines as key levels of support and resistance. So this also shows you that anytime maybe you are doing the trend line, just have that basic knowledge about the support and resistance. Okay. We say that support and resistance, these are levels whereby we have major turning points in the market. Okay. And there are some key things that we said anytime you are analyzing the market using support and resistance, you should never forget. One of them is that we say that use higher time frame anytime you are drawing support and resistance. Okay. The second thing that we say that support and resistance, anytime you are drawing support and resistance, we say that always wait for confirmation of price reversal before taking a trade. Okay. So that means that if maybe the market has come to an area of support or an area of resistance, we will always have to wait for that confirmation that will show you that the market will either reverse or the market will break so that you can be able to take the trade. Okay. Now, likewise, now, anytime you're using the trend lines, anytime you're using the trend line, we'll be using these areas as areas of support and resistance. So that means that if the market comes to that area of support, to that trend line, we would anticipate the market will always react to that particular time frame. Okay. Now, the other key thing that maybe you should consider anytime you're doing a trend line is that any trend lines, they're usually sloping at trend line are usually sloping 45 degrees. Okay. Trend lines are usually sloping 45 degrees. Okay, assuming this one is the market is 90 degrees, this one is 90 degrees. A trend line, this one is what we call 45 degrees. Okay, so anytime you'll be doing a trend line, okay, avoid when the market is clearly sloping upward or when the market is clearly sloping downward. Okay, look at a time whereby the market has some inclination and that inclination is not that steep. Okay, so you say that trend line, we are using it it's applicable on any time frame, acts as an area of support and resistance. It is open 45 degrees. And the last thing is that, sorry. The last thing about using a trend line is that we use it when the market is trending. Okay, so it is used in a trending market. Now we say trend line, it comes from the word trending market. Okay, so the best time to use this trend line is when you go in the market, and when you look at those forex chart and you're able to see that the market is clearly bullish or the market is clearly bearish. Okay, so that one at least you'll always be able to remember about the trend line. Okay, now before I can show you how to draw those trend lines, okay, there are also some things that I want you to note about how to draw the trend lines. Okay. How to draw trend lines. Okay. Now this is what I want you to remember about anytime you want to draw or anytime you want to use trend line as your trading strategy. Okay. The first thing that I want you to note is that you need a minimum of 2 swing points and connect them with each other. Okay. So you need a minimum of 2 swing points. You need a minimum of 2 swing points and connect them with each other. Okay. We are saying that we're using this trending when the market is trending. So is when the market is clearly bullish like this, or when the market is clearly bearish like this. Okay. So what you'll be doing as a forex trader is that you'll be going in your forex chart and then you'll be looking at, can I be able to connect like 2 or more points like this to form a trend line. Okay. If you see that the market is bearish, you'll be looking at areas whereby the market is, you have connected 2 or more points to give you a trend line. Okay. And then now, each and every time the market will come back to this area. Now, that's now when we'll be anticipating to take our trade. Okay. The second thing that I want you to note anytime you'll be doing a trending is that trending is usually stronger on higher time frame than on lower time frame. Okay. So the second key thing about a trending is that use higher time frame. Use higher time frame. Example, the 4-hour, the daily, or the weekly time frame. Okay. Anytime you are doing this trend line, I will always recommend that you use higher time frame. Okay. We say that it is applicable on any time frame, but I found more success on higher time frame than on lower time frame. Secondly, the market respects these trend lines on the 4-hour time frame or like on the higher time frame than on lower time frame. Okay. Now, the other key thing is that anytime you are doing a trend line, you are anticipating the next move in line with the trend. Like if the market is clearly bullish like this, if the market is clearly bullish like this, you are anticipating the next time the market comes to this area now will act as your area of support. This is the area that you would anticipate the market to react to this particular area. Okay. If the market is clearly bearish, like in this example, and you have connected two or more points, you are anticipating the next time the market comes to this area, the market will react and continue either going downward or will break that particular level. Okay. Now, the other key point about a trend line is that anytime you're doing a trend line, you are going to target the candlestick high or the candlestick low. Okay. So, anytime you're doing a trend line, always target a candlestick high or a candlestick low. Okay. Assuming nimeona market iko bearish hivi. Okay. And at this particular time, this is now when I'm seeing this type of candlesticks. Okay. I will always be able to target these candlesticks, the highs and the lows of this candlestick like these ones. Okay. I'm sorry, this one. So anytime that I'm doing a trend line, I should be able to target the candlestick, either the highs of the candlestick or the lows of the candlestick. Assuming that I have seen that this market is bullish like this, okay, I'll be targeting this candlestick, the lows of this candlestick, okay. So anytime you're doing a trend line, don't look at the body of the candlestick. Always target the highs of the candlestick or the lows of the candlestick, okay. Now, the last thing that you should always remember about a trend line is that a trend line should not intersect with the body of the candlestick. Okay, trend lines. So we have said that the fourth point is that we are targeting the highs and the lows of the candlestick. Okay. Now, whereas you are targeting the highs and the lows of the candlestick, a trend line should not at any particular point intersect with the body of the candlestick. Now, this is how a candlestick looks like. Okay. The colored region of a candlestick, this one is what we call the body. And this protruding lines is what we call the wicks. Okay, this one is what we call the wicks or the shadow. Okay. That goes to show you that anytime you're doing a trend line, the trend line should not, that line of a trend line should not pass through the body of a candlestick. Okay. So anytime if you want to have like a very perfect entries, if you want to have very perfect entries in the forex market, make sure that the trend line at no particular time is passing through the body of the candlestick. Okay. Now this is it. If I'm using like the 1 hour time frame, I go first of all and check, is the market bullish or is the market bearish? Because I know the market moves in three ways. The market can either be bullish, can either be bearish, or the market is ranging. Okay. Now, if the market is ranging or what we call the sideways market, now that's not the best time to use the trend line. Okay. Now, the second thing is that now when I go and I see that the market is clearly bullish or clearly bearish now, the next thing now for me as a forex trader is that I look for areas and points whereby I can be able to connect two or more points. Okay, whether I'm using like the 1 hour, I'm using the 4 hour, or I'm using the daily or whichever time frame, as long as it's on a higher time frame, I will connect two or more points. Okay, now the moment I connect those two or more points, now the next thing now will be to wait for the market to come to that particular areas. Okay, now since we already talked about a trend line on how